Favourites.
Yeah. You said I can put it in that correct down. Okay. But now.
Stay in your lane. All right, good to go. All right, people, it's 9:30. Let's begin. I declare the Audit and Risk and Finance Committee meeting ARF 23/2 open, and welcome all present. And just a reminder that we are being live streamed. Right, we have no apologies, but we seem to have lost a couple of councillors at the moment, so we'll presumably they'll arrive. Councillor Joyce and Councillor Sol. And as decided, we begin with a moment of stillness and reflection before we start the meeting. Settle the spirit, clear the mind, prepare the body to achieve what needs to be achieved. Yes. Right. Now we are going to have a change of order of business, and we will be to begin with item 9.2 because our first speakers are still arriving from the airport. So can I have a mover and a seconder to change the order of business, please? Thank you. Councillor Thwaites and Councillor Deputy Mayor Scrimger. All those in favour? It's carried. Right, so Mazura, over to you, and Phil.
Good morning, councillors. So obviously we've got the tax risk governance framework update. As part of that, we've also got our annual update in terms of how we've been tracking. We've got PwC Phil Fisher here today, who will provide the update to you and all the key highlights, and also take questions. Thank you.
Thanks, Azura. Yeah, obviously tax is everyone's favourite subject, I'm sure. It's kind of an important one though for us as a council to make sure we're on top of and we don't have any risks. So my role at PwC is managing the local government sector and all the tax for a number of the councils across the country. I've been looking after you guys for a number of years. And sort of, I won't go through the report, it's all there for your reading it. But I just wanted to pick up on a couple of specific topics and then happily have questions as we go. The first one is around sort of tax governance, and it's a campaign that Inland Revenue have been running, and they're very focused now on the public and the private sector, but they were originally starting this on the public sector. And back in July 2021, council put in place a tax governance framework, which basically sets out how the team is going to manage any tax risk and how they sort of approach just the general management of tax overall. Recently, as I say, the Inland Revenue have stepped up a campaign over tax governance and what organisations are doing, and they've really highlighted some specific areas of risk. One of them is around sort of processes and controls, as opposed to technical risks. So in the old days, there used to be a lot of focus on technical, tax advisors giving sort of slightly questionable or aggressive tax advice to find loopholes. They've recognised that nowadays people do seek tax advice on transactions generally and are a lot more conservative than they used to be, but there's still lots of issues in processes and controls. We've also talked about some high risk areas which are sort of relevant for council. One's around archaic and what they termed Frankenstein systems. With the reference to Frankenstein is basically lots of systems bolted together creates a risk with your tax management. Archaic systems, obviously, where there's been a lack of investment. Lots of businesses don't really want to spend money on finance systems. It's been seen a bit of a drag rather than anything else, but actually really important to keep them up to date. The other one that's quite risky is changes in personnel, where there's a significant change in personnel. We often also have risk, and obviously that's quite relevant here with both Adele and Azura relatively new, and sort of having to pick up what's gone before. I say, and then putting in a new system, which I believe council's on a path to doing as well. That's another area where we do get lots of tax risks. So these things all need to be managed, and council does have, a framework in place. And then I'm here to try and keep everyone honest. And look, I think it's both a positive step that you've put that in place. There was a bit of a slight hiatus why there was sort of the transition and Adele and Azura moving across, but certainly things have been reignited. And so recently, what have you done? You've had a payroll review a wee while ago, and there's a couple of things that did come out through that. One of them around allowances, and this is a risk that we see generally. Allowances that are paid to staff, a lot of focus now about providing wellness allowances and support to employees. It's really important that we make sure we tax them in the right way and through the right mechanism, because it actually affects someone's gross remuneration, which then has knock-on effects to social assistance. And really the main sort of observation there is that whenever a new allowance is being considered through the HR employment relations team, is thinking about what's the tax implications of this and how does this flow through. And the revenue have identified that small allowances but paid regularly create big tax leakage, and that's why they get interested in them. So it may not seem a lot at the time, but when you multiply it up, it's quite significant. The other key finding on the payroll review was just getting some more controls around our engagement of contractors and how we then determine whether withholding tax needs to be deducted. More recently, an FBT review has been underway, and the team is still finalising that report, but there is some, again, a little bit of enhancements need to be made to some of our working papers and the work done. I've sort of touched on this with Azura. But the next one that you're going to be having is the GST review, and look, in all honesty, councils really struggle with GST. Everyone thinks it's really straightforward. It's a 15% standard rated, can't be that difficult. The reality is councils are very diverse, lots of different activities. You have a number of transactions that might be zero rated. You have a number of transactions that potentially what they consider an exempt supply. And then you have your sort of standard rated ones. The particular risk area there for councils most commonly is around things like grants and property transactions. And some of the support I've given to this council over the years in that property space, you get involved in some interesting arrangements and the commercial proper transactions that need to happen, but they do need some support sometimes. So been doing quite a lot of work there, but again, Adele and Azura have asked us to come in and check where we are on our GST overall, and we'll probably make some more comments about that at a future event. So that's an overview of sort of how we're managing tax risk. I would say that council overall is in a reasonably good place. As I say, I look after a lot of councils across the country. The proactivity of doing tax risk management and then these reviews is really valuable. And on one of the pages of this document at the end, that highlights the 10 questions that Inland Revenue have been asking organisations as part of their governance campaign. And I think that if Adele was given that questionnaire, because it would land on Adele's desk, I think she could answer those pretty positively overall. So that's a good sign. So that's where you kind of are. But I thought also, while I've got you, and I know I don't want to bore you to death with tax, I can talk all day on it, believe it or not. But I did also want to just touch on some of maybe the topical issues for the sector and things that people are grappling with. The first one being e-invoicing, and even if you've got your own business as well, this is a thing that you need to be aware of. The government are focusing on and trying to encourage people to do what we call e-invoicing. So the old days of issuing a paper invoice to someone, they want to phase out. In the extreme cases that you see in Europe, some of this stuff now just goes straight through the tax authorities, doesn't even go person to person. But in New Zealand, we're still planning on sending the GST information through, but in electronic files. What does that mean? Well, actually, at the moment, it means we're changing the rules around invoices generally and the requirements. And so a number of councils are just trying to work through what does that mean on the paperwork that we issue, but also what we receive. And it has a system effect. So I've been liaising with the team just to make sure we're covered for that kind of stuff. You might have seen in the paper a bit of news around some FBT exemptions. Obviously, the government at the moment, they're coming into an election, keen to sort of promote some of the green stuff. And so public transport being exempt from FBT is one of the things that's coming through. It's just come through, but it's only in the FBT regime. So that basically requires the employer to pay for the public transport of their staff, and it would be outside of the tax net. But the other one we're seeing a bit of movement on is around e-bikes, scooters, and basically anything other than an e-vehicle, motor vehicle. And so basically that's encouraging people to use those types of motor transport to get to work. Again, though, it's a very, very narrow exemption, and basically talks about where you provide an e-bike for a member of staff to commute to and from work. So not for their own private use. What we're seeing, though, is a proliferation of arrangements where people are looking at salary sacrifice arrangements and other sort of mechanisms to potentially take advantage of some of the rules. And I'm just being a bit cautious around some of those because when the only person that's going to lose out through an arrangement is the inland revenue, then you probably want to steer a little bit clear of it. So, so sort of the basic rule of thumb. So I have seen one of them basically did say everyone's a winner, but didn't have that last bit except for inland revenue. So, so these are the things we're just trying to caution people over being on top of. There's a couple of other things. Sorry. Could have gone through some of these slides a bit more generally, but there's a couple of other things I think are really relevant to note, and these are in sort of the back pages. Things like legislative charges. There's a change, subtle change that basically says all fees and charges that are set by legislation will be subject to GST, which is a slight move away. So where we've had things like levies and the like in the past, that's been a bit of a sort of grey area. Now going forwards, any new fees and charges, and it's not confined to central government, that's also local authorities as well. So again, thinking about the fees and charges the council has. But the one that's probably caused us the most work of late has been around, caused other people a lot more work than us though, is mayoral relief funds. A wee while ago, we had a discussion document out from Inland Revenue around what constitutes a public fund. And the question is, why would we care as a local authority? And the question really comes up is, does a mayoral relief fund constitute a public fund which would attract donee status? And the revenue, well, we had a number of consultations with them. We were pretty much the only people that submitted on it from what they said. But essentially, it's come to light and come to a head recently with the East Coast. So the revenue have accepted that a mayoral relief fund can get donee status, which means that people providing money to those funds can get a donation deduction, which obviously is positive with what's going on. But they said that you need to apply at the time, and it can only apply for a specific event. So I know you guys had a lot of rain up here, so certainly by your ordinary standards. If you decide to set up a mayoral relief fund, it would have had to have been for that weather event. And you have to have some clear rules around what happens at the end of the weather event. So once you've paid out all of the funds, or if you've got any balance left, where's it going to go? We've now got an agreement with Inland Revenue that we can fast track those applications through. So all of the ones on the East Coast that we did, and for Thames, we managed to turn around in 24 hours, but you do actually have to go through a process. Some form filling, and either the CEO or the mayor or deputy mayor has to sign some documents. So not really what you want to be doing when you're dealing with a sort of quite a lot of natural disaster going on and managing your communities and looking after your community, but that is the rules, I'm afraid. It then has highlighted also, though, that once you've got the money, how do you manage some of the other things? So things like GST treatment on the money you get from government has got a set of rules. The GST treatment of other money that you receive might have a different set of rules, and you have to work your way through. And again, puts a lot of pressure on finance teams when they're already being pulled in many directions. So other things that have come out through that, privacy issues. So protection of personal information on here, that certainly came up recently, is because when you're paying out this money, you are normally asking for sort of personal information, and we've got increasing rules around privacy. So how do you manage those kind of risks? As I say, then there's just the practical issues. How do you get the money out the door? So, obviously after the cameras and everything else is gone, there's still a lot of work going on in the East Coast and in Thames. And the same could happen to you guys at some point in the future, because my experience across all the local government across New Zealand is there's every year there's an area that gets hit hard and needs help. So is one to just have in the back of your mind that this is really relevant. In here, and tax does move fast sometimes, there's a bit about, sorry, down the wrong way, mileage allowances, trying to see it. Oh yeah, definitely the top right hand corner. This might interest you all, because if any of you claim mileage allowances for getting to council, but also for employees, the rates have just moved. So there we talk about 83 cents. It's now moved to 95 cents as of last week. So that's something to bear in mind, up to the first 3,500 kilometres. And some of the other rates have also changed as well for petrol, hybrid and electric vehicles. Again, thinking about how council works out what it reimburses people and its employees is really important. You don't have to stick to the RD rates, but they're a good safe harbour kind of option. And the only other observation I was going to make is around that use of money stuff. So that basically, just to point out that 10.39% is significant use of money interest, and that's basically pretty much always charged when you get something wrong by Inland Revenue. So we can normally get you off penalties, but if we've got late payment or tax to pay for arrears, It's very expensive these days, seriously expensive. So if ever you wonder why we do put some emphasis on tax, it's because we don't want errors where we're going to have to be paying use of money interest. So just bear that in mind. That rate tends to widen, seems to always be in revenue's favour quite significantly as well. Surprise, surprise. So I could talk about tax all day. There's other stuff in here, but I'm happy to take questions and rather make it a monologue or let you get on with other treasury, more exciting stuff.
Thank you, Phil. So any questions? Deputy Mayor.
Yes, Phil, you were talking a minute ago about the donee status for mayoral relief fund, and you referred specifically to weather events, but does that cover other events too? For instance, if there was a Loafers Lodge event?
Yes, it does. Yeah,
it's not just.
No, it's not confined to weather events. It's any event where the mayoral relief fund's being used for a very specific purpose, which would fall within the terms of what you'd require for charitable purposes. So very, very akin to what you need if you were setting up a formal charitable trust.
Yeah.
Yes, I was interested to hear about the mayoral relief fund issue. Although, as I believe, and I'm looking at Adele here, it's just to receive the money from the government and pay it out rather than donations. I'm not aware if anyone's actually added to our fund or anything like that. So, from that, I take it that that issue of being a donee isn't really relevant.
At this, for you guys at the moment, that's absolutely right. It's not at the moment. So what happens is when these things sort of bubble up quite quickly, it's an event, and I say then you have to get it registered for that event.
Yeah,
and that's where some of that bookkeeping gets quite interesting, because you've got to make sure you manage that aspect.
So one issue though is it says they're time bound. So for Gabrielle, it was 13th of April for the personal information, but we haven't paid out any funds of that yet. And so how does that work if we're gathering personal information now to pay out these funds, but the deadline has already expired to delete the information? I don't see how that's going to work.
The personal information piece is always a bit of a challenge. That's why we've got a privacy lawyer that we use specifically for that, because the rules are a minefield. But essentially, the fundamental rule of thumb is that you can only retain information while you need it, and then you have to destroy it. So it's for how long do you need it? So I think that some of those time-bound rules do sort of get a bit overridden at times.
And my last question, if I may, Mr. Chairman, is I wouldn't mind if you could explain a little bit more about what you described as our two principal risk areas, that of tax treatment of wellness reimbursements, and perhaps Adele can explain exactly what those are, because that doesn't mean a great deal to me, and also withholding tax compliance. So what are those, and what are the risks involved in there?
You're happy with me? So the wellness allowance was a one-off initiative done a while ago, and it sort of was in the period it was covered by the review of that of payroll compliance, and really it just highlighted that we have to be careful. So it's not a thing that you do on a very regular basis, and that again is one of the reasons why it does create a potential risk if it's a one-off kind of transaction. People don't necessarily overly think it through. In the FBT legislation, we have a specific rule that basically takes out things like health and safety. So, but to be in the FBT rules, the employer, so council, would need to engage with a supplier. As soon as we give an allowance or reimbursement in the payroll rules, you don't have those kind of exemptions. And essentially, you then have to say, is it for someone's private benefit or otherwise? So the reason we've sort of highlighted that one is that we are seeing continually organisations thinking about how they can retain and attract staff, and wellness allowances is one of those things we're seeing a proliferation of. So that's kind of more from a cautionary side. To the point on the contractors and withholding tax, contracts are a nightmare to manage. Often you've got the delegated authority out at the budget holder level. It doesn't go through an HR team like an employee does. And so there's a bit more fluidity over there. And what you see with contracts over time is you're short on people, short on resource. You get a contractor, they're good, and you end up getting rolled over, and they get rolled over again. If finance aren't aware of it and there's no sort of direct sort of checking with finance, that employee contractor tests that you're supposed to run may not get actually looked at. And secondly, is you potentially run the risk of not deducting withholding tax when you're required to. Withholding tax isn't deducted from every contract payment, it's only for certain types of activity. So that's another kind of risk we run. So the key thing there is really around what's the process and tightening up those processes, and that's some of the work that needs to sort of go through. It's an interesting one, because it's always like, where do contractors lie? Should it be in the HR team or should it be in the finance team? the reality is it kind of needs to be those teams working together and the ELT overall having an understanding of the rules to make sure that they don't fall foul of them. That's
Probably why we employ the experts. Member Henderson has his hand up.
Oh, through the chair. Thanks very much. Hi, Phil. How are you?
I guess, yeah. How's things?
Very good, thank you. Look, just one question, Phil. In terms of looking sort of proactively for tax management, are you seeing any significant tax risk associated or in relation to the 3 water transition?
Yeah, good question, Stuart, as ever. The intention, and I've spoken to people both in the National Transition Unit and others, and the flavour everyone's saying is we don't want any adverse tax consequences to arise the transition. And so there's not intended to be, and the new water entities or the proposal was in the bill, they were exempt from income tax. The big issues I think we're seeing so far, and we helped Tatura with a submission
that's
on
all right.
this.
I'm not going to be talking on it. I'm just listening. It's audit, risk and finance. So.
Sorry. So the submission that we made, which is in the public domain for Tatura, basically does talk about the fact that the legislation in the GST legislation hasn't been updated to reflect and clarify some of the GST treatment. But to answer your point though, Stuart, no, I don't think there will be any tax leakage or risk in that sense. There will be some things to be careful of. So for example, when people move from council, say, into a water entity, that would be an area where you might see some tax considerations need to come to light. For example, they may have a vehicle. What's their package going to look like? Does KiwiSaver automatically transition? But I wouldn't say something that council specifically needs to worry about. That's going to probably be done at a central level would be my pick, but we are definitely monitoring and keeping an eye on all that sort of as it progresses.
Thank you. Councillor Joyce.
Perhaps Adele can help with this. How do we treat contractors? Because in corporate life, they always run, well, the corporate life that I had, they always run through HR for these very reasons. Do we run all our contractors through HR, or do we actually do them through other processes? Because that is what's been pointed out, that's actually can be quite risky because people don't know the rules that are running them.
Through the chair. So yes, we proactively manage the contractors. And obviously, you know, there is a scenario where the definition of contractors comes into play, you know, whether it's just an individual or whether it's, you know, the type of contractor that you bring in. So, you know, with the due diligence of the team, we're making sure that we're on track with that. Thank you.
Councillor Daly.
Yeah, Phil, could you explain why the GST treatment for pensioner housing is a bit tricky?
So pensioner housing or social housing is one of the areas where it's an exempt supply for GST purposes. And that sort of is different from other residential properties that you might have. And what you have to be careful there is to make sure not only do you not account for GST on the supply of the rental, but also then you need to make sure that the correct coding is done for any expenses that are incurred. And often systems are set up in interesting ways that it's not always, it depends whether they're set up on a sort of activity basis or on a type of expense basis as to whether or not it automatically excludes the GST, because you can't claim the GST to the extent it relates to an exempt supply. So for council, that's one of those things we have to sort of manage. So understanding the properties that you have in a council portfolio, which are in the exempt supply area and which aren't, is quite important. And to add some flavour to that, so social housing, clearly rented, clearly falls within the exempt supply rules, not too much of an issue once it's set up properly. But you could buy another property that you're going to fundamentally, and the reason you bought the land and property happens to be on it is because you want to do some roading or some reserve land, etc. In that instance, the reason you're buying it is for a taxable activity, and therefore you can claim GST on the whole of that cost, but then you have to make adjustments and give some of that GST back for the period of time while you rent that property out. And then once you subsequently sell it, you then need to account for GST on that sale, depending on the person on the other side of the transaction. So it starts getting very messy very quickly. One of the things that's really crucial though is always to understand why are we buying this, what's the purpose, and then off the back of that we can then work through the GST. But when you go through those transactions, the other issues you always need to think about is who's on the other side of the transaction, what's their motivation, what's their GST status, and we need to think about it from our pricing side of things as well, because whether it's plus GST or GST inclusive pricing, when you're selling property, you always want to go plus GST if any, and if you're buying, you want to go GST inclusive, but you've got that natural tension between the parties. So again, finance and the property teams working closely together, and I've spoken quite a bit with both teams on some of the transactions, just to make sure saves you, the potential leakage of GST can be quite high. So yeah, that's why property is messy.
Councillor Murray-Bench.
My question's probably quite irrelevant, but we've had significant change in personnel within this council, and tell me the changes that the taxation system applies to every local authority in the country and every business in the country. So people moving from one local authority to another or from private business to local authority won't get confused?
If in principle, if someone's got a good understanding of tax, and to be fair, most people it's not their day job. Unfortunately, that's why I picked as a career. But most people, they take their knowledge with them, and they will obviously and how they've approached tax in the past. And I've worked with Adele and Azura in their previous organisations, and so you've brought people over that know and understand. I would say there's more of a heightened risk where you've got people that are coming in from outside of local government sector because of the diverse range of activities that local authorities do. The nuances you have. Most businesses, I sell something, I buy something, it all relates to, it's all GST-able, standard rated, not too complex by and large. Local authorities are forever doing transactions that have got a whole range of things to be considered, so definitely more complicated. And so if someone's moving in from outside, I think that's where there's heightened risk. So.
All right, thank you very much.
Thanks for inviting me. Cheers.
We just need to know, we need to
Right, well, we need to
receive the report and receive the presentation.
receive that report and receive the presentation. So have a mover and a seconder for those. Do thank you, Councillor Henry, Councillor Crawford. All those in favour? Against? Carried. That was very timely. Taxi delivered you on time.
Good morning. So obviously we've got Bancorp Treasury presentation next, and I'd like to introduce Ross to you to take over. So thank you.
So back to 8.1 on your agenda, people. 8.1, oh, page 8. Thank you, Ross.
Thank you, everyone. Just thought I'd talk to you a little bit about what we're seeing in the
Microphone.
markets. So right, thank you. I'll talk to you a little bit about what we're seeing in the market, and then we'll move on to the strategy that we're employing to manage our treasury risk here, and obviously, the interest rate risk that we face on our debt. So, to the first slide. As you can see, inflation has been obviously the big story of the last 18 months, 2 years. And you can see that we're well past the peak of inflation, but there's obviously a long way to go. So some countries are facing more difficult inflationary environments than others, with obviously the UK up there at 10.1%. New Zealand, you can see there we've come down to 6.7%. And our data is quarterly, which is makes it a little bit more difficult. We're not getting the most up-to-date data. But the other important one to look at there is the US in red. They're still facing 4.9% inflation, but that's coming down quite rapidly. And that's important because it affects our long-term interest rates in New Zealand. So short-term interest rates are obviously affected by the RBNZ, which look at the our inflation, and then long-dated interest rates are affected by the global environment, which is predominantly driven by the Federal Reserve. Detailing New Zealand's inflationary environment, you can see the chart at the top there shows that we had a 30-year high in inflation, so it's a pretty remarkable environment. I don't think anyone here would have expected 2 years ago to be staring down the barrel of 7 or 8% inflation. For a long time, you can see there where we're stuck around 2%. So a lot of economists around the world were talking about inflation being a thing of the past and never to rear its head ever again. But obviously that's a cautionary tale for everyone. If we break it down by the sectors or the components that make up inflation, in that pie chart you can see housing and household utilities and food make up the bulk of, or nearly half of inflation, and transport is also a big component. And then on the left you can see the three biggest contributors to the March quarter inflation were food, alcohol and tobacco, and housing and household utilities. And council rates are obviously included in housing and household utilities, as well as things like the maintenance of your house, rents, and the power bills and things like that. So we're seeing quite strong underlying inflation in those or that housing category, which is quite sticky, and that's probably going to linger for a lot longer than, say, the food group, for example. Food is quite a volatile component, so we've seen quite a wet summer, obviously not ideal growing conditions, and so food prices have been pushed higher, but they could quite rapidly come back and drag headline inflation down, but we'll see that underlying core inflation probably still remain quite high for some time. And in fact, I saw a pretty scary headline this morning. The RBNZ did a household survey of inflation expectations, and across 1,000 households, they expected inflation to be 7.4% in a year's time, which obviously back on my last slide was at the moment it's 6.7%. So households are actually expecting inflation to go up over the next 12 months, which is a big concern for the RBNZ. Yeah, that's right. Just looking at some risks, obviously New Zealand's running a rather large current account deficit, and I won't get into the detailed economics of it, but it essentially means that we're spending beyond our means as a country. We have to borrow from overseas to fund that, and the credit rating agencies have flagged that as quite a bit of a warning, or they've warned us that running a current account deficit that large for a long time could lead to a ratings downgrade. So if that happens, obviously the sovereign gets downgraded. LGFA by default would get, sorry, I shouldn't use that word, by extension of being backed by the government, will get a downgrade as well. And then every council will face higher borrowing costs. So that's certainly something to keep in mind. There's a few other risks there. I won't go into to detail of it all, but the interest rate volatility that we're seeing, even just the last week and a half, we've seen a huge jump in short-term interest rate expectations. So I'm sure everyone saw the headline with Westpac calling for the OCR to go to 6%. ANZ and BNZ are now saying 5.75. We have the RBNZ meeting tomorrow, The market is expecting at least a 25 with a chance that they do a 50. So it's really kind of all on the table at the moment. The RBNZ themselves have flagged 550 as being the peak of the cycle, and this that was before we've seen this huge surge in immigration. So immigration will put pressure on inflation through, you know, the rents and other core services, but at the same time, it's an increase in the supply of workers, so that wage inflation will hopefully, you know, reduce as a risk, which might take a bit of pressure off some components of inflation, but other components will be increased. Another really large risk to New Zealand's economy is just how much money has been lent to the housing market, and this is why we're a little bit skeptical of the reasons for going to 550 or even 6% with the OCRs, because it's just going to be so damaging to so many households. And if you look at other central banks around the world, no one's gone beyond 5% just yet. The Australians have topped out at, you know, the high threes and said we're happy to wait and see how that feeds through the economy and see what effect it will have. Whereas our central bank does have a bit more of a lag between a hike and then the full effect being felt in the economy. It's about 12 to 18 months. But to me, that means, you know, they should exercise a bit more patience and pragmatism. But we have a central bank pretty keen to get inflation under control, which, you know, they can't be blamed for, but we might see them overcook things and yeah, the effects could be pretty dire. But so anyway, just with this chart, you can see since basically the start of 2020, the banks have lent $68 billion to the household sector. Businesses have borrowed about 11 to 12 billion, and Agri has actually paid back net. I think it's around 400 million. So if I jump to the next chart.
Can I just hold you there, Ross?
Yes, sure.
We had a question from Councillor Murray Bench.
So just wondering if the Democrats and the Republicans can't come to an agreement and they default, what impact will that have on the New Zealand economy?
Other than the kind of immediate financial shock, I wouldn't say too much impact on the economy itself. We might see a sell-off in global equities, which would obviously lead to a sell-off on the NZX. The Kiwi dollar as a risk currency would be sold down. But I think that would all balance itself out, because at the end of the day, the US isn't going to default on all of its 30 odd trillion dollars worth of debt. It'll just be the first bond payment that's due, and then presumably they'd work things out, and then they would still make good on that interest payment. It'd just be delayed. So it's not like the, you know, an Argentinian style default where they literally run out of money. It's just, I probably shouldn't downplay it too much, but it's a timing thing. It will be a bit of a shock to the markets, but I don't see it as being a long-term, you know, structural change. I see it as just a bit of political grandstanding and a short-term risk.
Second question, Mr. Chairman. For those people who don't own their own home, what does this signal to them?
That's houses might get cheaper. They're already down, depending on where you look, 20, 30, even in some cases 40% from the peak. So if anyone can afford to service the mortgage, they, you know, can take their time and potentially buy a house that's going to be a lot cheaper than it was a year or 2 years ago. Sorry,
Not here.
not here. Okay. Well, we'll see. You know, this is a risk, and obviously the amount of money that sits against housing, and for anyone who's bought in the last 2 years, there's going to be a lot of people that are underwater on their mortgage. So the house now is worth less than they've borrowed, and particularly if they were, you know, lent at 90% LVR, which some of the banks are allowed to do. So I think we will see, as that cash rate increases, as more households have to refix their borrowings, we're going to see more stress in the housing sector. So you will see more mortgagee sales, and if someone's sitting out there with, you know, biding their time, they could absolutely find themselves a bargain.
Councillor Crawford.
I heard on the radio this morning the increase of people withdrawing out of the KiwiSaver.
Mm-hmm.
I know there's a lot of being rejected in doing that, but you know, because of, you know, the environment we're in now, how will that impact?
Well, obviously that means there's going to be less money available for investment in New Zealand if people are just, you know, they're saving less because they're just trying to make the interest payments. But as long as, you know, it's a temporary thing, or as if they can eventually get, you know, once we see rates normalise, if they can get back to a place where they're saving again, then that's obviously positive. But you know, if they can avoid being kicked out of their home and it being mortgagee sale, then I guess that's a positive. Yeah, but I think as a whole, you know, the country's in for a pretty tough time for the next 12 months. So this chart just puts it into a bit of a wider context. This is going back to basically the GFC, and you can see just how much money has been linked toward the housing market, and also how geared the banks are towards the housing market. So you can see in that pie chart, 65% of all bank debt is linked against the housing market, and it's an asset class that's now down 20-odd%. So we could potentially see a bit of stress in the banking sector if well, our banks are very well capitalised, and the RBNZ has done well getting them into that shape. But you know, when most of the lending is against an asset class that's now 20% lower, there's without a doubt going to be you know, write-offs and that sort of thing. So again, another risk for capital markets as a whole.
So another question from Councillor Cox.
Just on the business lending, I'm presuming the business lending recorded here doesn't include business lending secured by homes?
That's a good question. I think it does. Yeah, I think the housing lending is just mortgages, and the business lending is not taking into account what's securing it. But if someone's used their mortgage to fund the business, that would be included in the housing one. I'll just point to some consumer indicators. This is from a survey that Tony Alexander's done, and it again reinforces that view that, you know, this higher interest rate environment, that highly indebted place that households find themselves is impacting consumer spending. This is obviously how a recession starts to manifest itself. You can see the top left headline confidence. So consumer confidence is nearly at its lowest point for this survey, and the other one there. Sorry, let's see if I can move that. There you go. The proportion of households spending less to get debt down is up to nearly 30%. So households are obviously becoming conscious of how indebted they are and how painful that, you know, mortgage has become. And I like this one on the bottom left. The percent of respondents planning to spend more on these various different spending classes, and groceries is literally the only thing that households are going to spend more on over the next 12 months. Yeah, surprisingly. Eating out, you can see there is well down. So consumers are obviously, tightening their wallets and potentially the belts and eating out less. And that's part of the reason they're spending more on groceries. But probably the other part of the reason is that everyone expects food to continue on going up. So of course, you're going to spend more on it, even just for the same things. But it just goes to show that consumers are going to spend less across the board. I don't think anyone's got a choice on that.
Councillor Scrooge has a question.
You spoke about the, paraphrasing your comment, so correct me if I'm out of place, but enduring the pain until interest rates normalise. What do you mean by normalise?
Normalising would be getting back to what we call the neutral interest rate. So the neutral interest rate is where the cash rate's neither stimulating nor contracting the economy. So there's a balance, where it was at 0% was clearly stimulatory, where it is now at 5.25%, that's clearly contractionary. So somewhere in between is a neutral point where it does nothing. And in theory, obviously economists are good at theory, it'll get back to that level over time as we get, as the imbalances work their way out through the economy, and the RBNZ can cut to that neutral level. So who knows how long it takes to get there. But all we can do is, look at the data set we have and the actions that the central bank will take, and then, extrapolate from there.
Councillor Reid.
With the government spending up large, the only tool that the Reserve Bank governor has got is to put up interest rates, isn't it?
Yep. Yes.
So are we seeing any change in government spending?
Well, no, obviously the budget was released last week and again, ran another deficit. So yeah, I don't think we're going to see too much fiscal restraint from this government. No. Yes, correct. Yeah. The market certainly took the budget as inflationary, and that interest rates should be higher because of it.
Councillor Henry.
Local labour market remains strong, yet we hear that many businesses, and indeed this council here, are struggling to find people to fill jobs.
Yes.
So
yes, that would indicate the strength of the employment market. So obviously, if you're a worker, you can see here the unemployment rate is near a record low, and the participation rate is near a record high, and that's the number of people participating in the workforce. So the number of people, the sheer number of people employed is almost at a record, or at a record. So that indicates that anyone who wants to work can go out and find a job. There is work out there for anyone who wants it. So that indicates the strength of the market.
So is the fact that we went through the way we progressed through COVID in New Zealand and our borders were closed and things, would you see that would be an impact in why we have shortages for people to fill the jobs that are
yeah, to an extent. There's probably a lot of people that missed out coming here because the borders were closed. We're obviously down a lot of international students, and they tend to stay and become part of the workforce after the qualifications. The other thing is just the sheer amount of stimulus that was dumped into the economy to ensure we didn't go into a very deep recession meant that the economy went into overdrive, and so there was a need or hunger for workers, employees. So that's the other part of the reason we're down here.
Okay. Okay.
Councillor Coxie.
Just that, well, two questions actually. The unemployment rate, does that include the people on job seeker benefits still?
No, that's a different survey. I'll be honest, the unemployment rate is an imperfect number. It's an imperfect survey, but what it is good for is it's good to look at the trend over time. So to me, that 3.4% is a little bit irrelevant because of the way the survey asks. It's anyone who wants to work but hasn't found a job yet, essentially. But once you dig into the detail, there's it's a little bit clouded. So I would focus less on the absolute number and more on the trend.
Okay. Second question was just about immigration driving inflation at the moment. Given that we had a period with, well, obviously for various reasons, but pretty much zero immigration. And now I think it's targeted at meant to be 100,000 this year. Is that correct?
Yeah.
So where are they coming from? But where are they skilled migrants or?
Look, that's a good question. I haven't delved into the details of it. I know that we are losing a lot of young skilled people, and from what I understand, they're not entirely being replaced. So there will be a lot of unskilled labour coming in and unqualified people coming in. But 100,000 people is a lot of people, so surely some of them are going to be well qualified.
Councillor Crawford.
Yeah, I just had a question around, so in the environment we have in the Bay is we have a lot of seasonal workers. So people who are coming in and they might work just the amount of time and suddenly there's no job. So like in my town, we've suddenly got a lot of people who are working, but the season curry fruits coming in and suddenly everybody's looking for a job. So I'm wondering how that reflects, those ebbs and flows of, those casual workers. Because it seems that there are a lot of people, maybe parents, mums who've got children that are looking for part-time work, things like that. I just wonder how that reflects.
Yeah, well, obviously there's a lot of demand for labour at the moment. So any young person can, excuse the pun, pick and choose where they want to work. So, to go out and pick kiwi fruit in the wet summer or the wet weather we've been having possibly isn't the most attractive thing to do. And the up until now, the lack of seasonal workers coming in has obviously been a detriment to the industry. So it's just added cost. It means that to get people to go out and pick is just more expensive.
A question from Member Henderson. Stuart.
Through the chair. Look, with I know that you have quite a lot of connection with the rest of the local government sector. Just in so anecdotally over the last 6 months, what's been your observation with other councils in terms of any trend around rates arrears increasing?
Sorry, rates arrears?
Rates arrears. Is there, what are you seeing in the sector at the moment?
Yeah. As far as I know, rates arrears are increasing, and it's obviously a concern for any council. But from what I've heard, it's not a terrible concern. It's not a huge problem just yet. I imagine we'll see it continue to increase along with the cost of people's mortgages and that sort of thing. So as chat to other councils and whatnot, no one's flagged it as a huge problem at the moment, but it is something that other councils are thinking about and noticing that rates arrears are increasing.
And a question from me: that 72% participation rate of the labour force, that 72% of the labour force are turning up for work, or is it 72% of the population are in the labour force? What, 72%?
It's 72% of the working age population, so anyone over 15 who has a job or is employed. Yeah.
Oh, sorry, one more.
Yeah, could you comment, is there a disconnect between the Treasury forecast and the Reserve Bank, do you think, in terms of inflation? The Treasury predict inflation to drop to like 3.3% by the end of next year. But the Reserve Bank is expected to hold the OCR at that 5.5%.
Yeah. What I will say is that they're all terrible at forecasting. For example, the RBNZ in the March quarter expected inflation to go up to 7.2% from 7.1, and in fact it fell to 6.7. And in the December quarter, they expected GDP growth to be plus 0.7%, and it was minus 0.6%. So I have no faith in any of them forecasting, but they have to put something in the model, and they, inflation will get back to 1 to 3%. It's guaranteed, because they will hold the cash rate high enough until inflation is there. It's just a question of how long it will take.
Could you explain why? Is it just a case of keeping it up there until it beds in, and not sort of just taking?
They will just kill off the economy to get inflation down there, and it's just a question of how painful it is and how long it takes, essentially.
Councillor Joyce.
I notice you're talking about the neutral rate, cash rate, but you didn't actually say what you think it is, because that's the hard part, right?
That is.
So what does Bancorp currently think is a neutral rate for the OCR? Because that will affect your forecasts and how you do your forward swaps and things.
Yeah, absolutely.
And I think I was going to just point out that the reason why the RBNZ and Treasury forecast inflation to drop is because if they don't forecast it to drop, it won't drop. Right. So it's actually as much a political statement as it is an economic forecast for them. Because if the RBNZ forecasts inflation to stay up, it will stay up. So they can't forecast inflation to stay up. It's just not, and neither can Treasury, because people will go, aha, well, don't have to worry about it then, do we? Because they don't care.
Yeah. Just on the neutral rate, it's probably 2.5 to 3.5%, maybe 3 to 3.5%. So that's why when we come to look at hedging our future interest rate risk, anything close to that 3.5% is a good place to start adding hedging, not necessarily increasing it significantly. If I just jump forward to our debt forecast, you can see here, we do need to add a couple of little swaps just to get within policy based on this forecast, the forecast for debt, sorry. So you can see there, 421 and 388 for these swaps. Those are actually a little bit higher this week, but 388, it's not a terrible rate. It's not the best rate we've seen. And, do I wish we hedged everything when rates were at zero? Yeah, absolutely. But there were a lot of unknowns. Obviously, we didn't know what Three Waters was going to look like. The RBNZ were telling us they were going to go negative. We were reluctant to add too much hedging down there because of the unknowns. But now, with the cash rate at 525 potentially going higher, the market's pricing in some deep cuts, and we can take advantage of that pricing by adding in swaps that start beyond that hump, take advantage of the forward part of that curve, and lock in a rate under 4%, which if the cash rate settles at 3.5%, BKBM, the bank bill, always has a premium to that. So generally that's 20 to 30 points. Cash rate's at 350, BKBM's at 380, and a swap at 388 is thereabouts. So it's a good place to add hedging, get back into policy.
So going back to chart 9, I noticed that the RBNZ forward path at the moment doesn't go anywhere near 3.5%. So they're not seeing, I mean, I don't know what their definition of neutral is because everybody has a different one,
Yeah.
but it does seem like they don't see themselves
This-
going back to neutral over
Sorry,
the forecast.
just to
Yeah.
clarify, this is the market pricing.
This is market pricing.
for-
Okay, the market doesn't see it then.
Yeah. So what you can see here, in fact, this is a little bit, the black line's a little bit higher this week after Westpac made their OCR call. It now gets to around 6% and then tails off. So through, the back end of this year and then through 24 and 25, there's a lot of cuts that are priced in. And you can see it settles there around, 375, a little bit under 4% from 26 onwards. So that's what, when we're looking at our forward starting hedging, we're going to take advantage of that, the tail of that curve. The other thing there is the reason I put the Fed in there is, as I said earlier, the long-term US interest rates heavily affect the long-term New Zealand interest rates. So our interest rates will get dragged lower if something kicks off in the US and their long-term interest rates come down, ours will naturally get dragged lower. So that's, something else we can take advantage of, or at least, take note of. But you can also see there the Fed is now expected to no longer hike. They're expected to be finished their hiking cycle with cuts beginning by the end of the year.
One more from Councillor Valley.
Can you just explain why China is a little bit out of step in terms of they were sort of quite high CPI back in 2020, but they've managed to pull it all back, and I guess it's something to do with the government.
Chinese data's can be a little bit dubious at the best of times, but look, they've got issues in the economy. They obviously had quite a prolonged lockdown period, and there's a lot of issues in their housing sector. With really large, we're talking massive construction companies falling over, and the government stepping in to try and shore things up. So, they benefited from the world sort of reopening after COVID, but as the world's slowing down, China's bearing the brunt of that. So their factories and stuff are a lot quieter than they were 18 months ago. So I think we're seeing the effects of that, the effects of a slowing global economy, and those internal issues that China's facing.
I have a question. I started my mortgage journey at 7% and never saw an interest rate like anything like that people enjoy today. And yet the economy grew and all that sort of thing. So what are the major structural changes that now are 2 to 3% is a sweet spot to keep the economy ticking over when it's ticked over quite happily at much higher rates for the last umpteen years?
Yeah, well, look, I just come back to this, the growth in debt. You can see bank household, the bottom bullet points there, bank household debt has increased by 211 billion since the GFC, and total bank household debt is 361 billion. So 2/3 of that has come in the last 15 years. So we've fueled, and this is a global problem, we've fueled the economy with debt over the last 15 years since the GFC. And now those chickens are coming home to roost. But the problem is that a more highly indebted household requires a lower interest rate to service that debt, because incomes haven't risen at the same rate that house prices or asset prices have. So that's the structural change that we've seen over the last 15 years, is that debt loads have just become bigger, and the income hasn't risen to service it at a 8 or 9 or 10 or 15% mortgage rate. So households, anyone who borrowed, I feel sorry for anyone who got into the housing market in the last 2 years. They were enticed by these low interest rates. They took on a lot of probably a lot of debt. The average Auckland mortgage for first home buyers in 2021 was $800,000, and first home buyers on average are, well, as you'd expect, are the most highly indebted. They're the lowest earning of any homeowner group, and they're the ones who are going to be most stressed by this rise in interest rates.
But that's gone hand in hand with money printing, hasn't it?
Oh, absolutely,
That's what causes the.
Yes, yeah. Should they have created should the RBNZ have created $100 billion and dumped it into the economy? I don't think so at all. Should they have gone to 0% or 0.25%? Not at all. And look at the effect. But there's not a lot we can do about it now. Well, the RBNZ is trying to chase its tail with a high OCR, but it's created this situation.
We'll go back to Stuart.
Thank you. Through the chair. Look, I was just wondering if you could go back to the strategy on the corrective measures that are being taken in relation to the policy. Now, I'm a bit. I mean, no issues whatsoever with your strategy, but I am curious as to, this is something that's an ongoing thing that's done within delegated authorities with management in being able to correct. It doesn't need this committee's approval. So, I mean, as I say, this strategy was considered weeks ago, and in the time that it's taken, even today, if I look at these forward starting swap rates, the top one at 4.21 is currently about 4.54 today. Mm-hmm. And the second one is currently about 4.05. I'm just, is this not something that, we kind of expect that you and the team, the management team, should actually just be doing this? I mean, it's great to hear it from you, but I would far rather have heard it in terms of retrospect that this is what we did and this is why we did it. Because I don't think Treasury risk management should be done by committee.
Yeah, well, I will say one thing that we only just got an updated debt forecast start of the week, was it? Start of this week. We updated the debt forecast. So, and we've seen a lot of interest rate volatility. So we were taking our time. We didn't want to go and hedge on an outdated forecast and, find that we didn't have to, or we hedged too much at rates that aren't necessarily attractive. So we wanted the most up-to-date information, which we got this week.
Okay. I know I've brought it up before, and I brought it up last week as well, about the debt path, and importantly, we sort of have two debt paths, don't we? We've got an existing one which is based off your LTP, and that gets updated by management in relation to what they see and how they change. And of course, we've got the very long forward one, which is Three Waters, and its influence on what that debt path's going to look like. Do we have? I mean, I'd love to see what this looks visually in relation to what, at the moment, from the information that we currently know, what's our debt path looking like, and what is our hedging profile looking like relative to that at the moment?
Yeah, well, we got the updated debt forecast there. So as you can see, forecast debt is the latest information that we have on this chart. We've applied a 70% haircut to the increase in debt. So same starting point, but every dollar of forecast increased debt is haircut by 70% to get our core debt. And that's because we know that councils struggle to deliver full CapEx programs. I don't know of any council that's delivered 100% of its planned CapEx in a year. So naturally, you know, we're taking a pragmatic approach to hedging because we don't want to go and hedge, you know, the pie in the sky stuff if we know that it's going to be tricky to deliver. So that's why we apply that haircut and get a core debt number, and then that obviously, you know, takes a little bit of pressure off having to add to hedging at these current relatively unattractive rates.
Yeah. Does that core debt forecast there, which we see our boundaries, i.e. the red lines, working off, does that include what's likely to occur over the next 10 years with regard to Three Water debt amortisation?
Sorry, through you, Mr. Chair. The debt forecast, the cut that we've provided based on the 70% includes the full debt forecast for Three Waters. We haven't separated that out for this exercise, mainly due to the volatility and the unknown factors.
So this does not include what might happen with Three Waters.
Yes, so it includes Three Waters, and we've left it as is, yeah.
So, sorry,
we haven't done any modelling for excluding Three Waters in this particular.
Okay, we haven't, right. So it doesn't include Three Waters. Thank you.
Just through the chair, just in terms of debt, there's still some decisions being made by central government in relation to this. It looks like council will continue to hold the debt for up to 5 years at this point in time, but that's still subject to the legislation.
Hang on, we've got quite a list here, but I'm going to jump the queue while we're on this topic. So what is the cost or saving of making this adjustment now in times of uncertainty versus just saying we accept that we've made a policy breach, it's a minor technical one, we'll live with it and carry on?
Well, in theory, there's no cost to adding the swap. All you're doing is simply crystallizing the current market view of where that floating interest rate will be in the future. So you're adding certainty, not necessarily cost. It's, in theory, when you add a swap, it's at zero value because it's simply the crystallization of those resets, those floating rate resets that the market's currently pricing in the future. So there is no cost. It's or saving. It's just certainty. Sorry, the bank will add a spread, a little bit of margin, you know, for its services, its pound of flesh.
Councillor Joyce. Oh, you know, I was at the end of one. Major James.
I'm interested that you said that Bangkok applies a 70% haircut to the debt forecast. I'm interested why that's 70% when our forecasts show 80% capex delivery instead of 70.
Yeah, that's our experience across the sector. That, you know, on average, councils will deliver around 70%. We've modelled it with 60 and with 80 and 90. We've been through that exercise, but that's our experience.
Has that been done with our staff? Because on page 20, the calculation shows that we're on track for 80% target.
So through to you, Mr. Chair, I can take that one. So obviously the forecast that you've got for the purpose of this financial year, and what we've done is, because we're going into so many unknowns in the new LTP, that particular forecast is all the way to the end of the current LTP. And so we've applied a 70% just on the best known figures at this point in our averages.
Deputy Mayor Scrimgeour.
Yes, I just wanted clarification of your comment around there being no cost to putting in place a swap, like if you take it literally at that point, but potentially there is a cost if interest rates fall further out. Am I correct in that assumption?
Absolutely, yeah.
Yes.
There could also be a benefit if the opposite's true.
All right, let's get you back to your presentation.
Yeah. That's pretty much all I wanted to highlight. I do have, you will see me flick past some of these. Just again, wanted to highlight the volatility that we've seen in the interest rate market. So part of the reason we haven't transacted these swaps is because, you know, we expect that volatility to give us an opportunity to transact at more favorable rates. We obviously haven't seen that this week. It's, you know, pinged back higher the other way. But as you can see, when I took this chart last week, it was the lowest point. That blue curve beyond 1 year was at the lowest point that we've seen over the last 6 months. And at the moment, what we're seeing is that short end is being shunted higher with that expectation that the cash rate has to go higher. But the long end is largely unaffected. And the curve inversion that we're seeing, so the difference between the 2-year swap and the 10-year swap is it's currently at its highest point since the GFC. So this is generally an indicator of recession because it's a market signaling that something's not quite right, that short-term rates are too high and long-term rates will, you know, will be lower. So because that short end has been pushed higher, the spread between the 2 and the 10-year swap rate went over 100 basis points, went to 105 basis points, which is the highest since, and in fact is higher than we saw on the eve of the GFC. I think it got to minus 96 basis points. So I'd have to go back even further in time to find out when it was more inverted. This chart just shows the volatility that we're seeing at the moment. If you just focus on the very right hand sort of 1 year worth of data there, you can see it's been within a range, but just going, all these swaps are just going up and down, up and down. So the only constant there is the floating rate, and the OCR is just, you know, on their march higher. But now the floating rate is higher than I've got the 3-year swap on this chart and the 3, 5, and 10. So the floating rate is essentially the highest point of the curve at the moment. And if we look at the forward starting swap grid, so these are the swaps that start in the future. So if you take out that the initial hump that I talked about, then you can start achieving rates, you know, under 4% if they start in 2 years' time. If you go down to where it says 2 years, and then going across is the duration of the swap. So, for example, if we focus on a 2-year swap starting in 2 years' time at 3.84%, to give you an idea of how much volatility was seen, this was the presentation my colleague gave back in February, and you can see that 2-year swap starting in 2 years is 4.4%. So we've seen a huge amount of volatility. And in fact, my colleague has just sent me an updated grid this morning. So that 2-year swap starting in 2 years is back to 4.49%. So yeah, it's quite volatile. Let me just double check that. Sorry, that's the 2-year swap starting 1 year. 2 years starting in 2 years is 3.99. So certainly higher than it was on the 17th of May when I took this, but lower than it was 3 months ago. So that's all from me. Hopefully that gives you an idea of how we're managing the interest rate risk that we face. Oh, sorry, one point I did want to add is that this borrowing profile, you can see as it grows, we're quite highly hedged at the short term. If you focus on the very left-hand point, we're about 82% hedged. And then going forward into the future, when our debt starts to grow is probably around the point when interest rates start to come down. So that's why we haven't raced away and thrown a whole bunch of hedging in, because obviously there is uncertainty around that debt. There's uncertainty around Three Waters, and there's uncertainty around the path of interest rates. But from here, there might be a bit more short-term pain. But as I detailed, it's going to be painful, and that will lead to rate cuts. It's just a question of when they come. So when our debt grows, will likely coincide with interest rates coming down, so we can extend our hedging then if we need to.
One last question from that's not one last, Councillor Daly.
Yeah, look, I'm just not much of a financial expert, but just in layman terms, can you explain the relationship between a 70% capex delivery and how that ties into the swaps? And is it purely a case of you got more cash on hand if you haven't spent it on capex?
Not necessarily, because you'll probably be rating to how much you're spending. So you might have a bit of cash on hand, but you're not going to rate for the 10 years of high capex when you're only going to deliver 70% of that, if that makes sense. But we're trying, the swaps we're adding is based on what we believe council debt will grow at in the future. Now, obviously, we don't have a crystal ball. We can't know for certain, but we can make an educated guess of the path of that future debt growth, with based on what we know about the sector and what your plans are for spending.
Just to follow up, okay. So the councils only deliver 70% capex every year on year. So but there's a long-term plan, where you're rating for all this activity that never happens. How does that sort of wash out in the? Are we overrating for stuff that we're not delivering?
Balanced budget. Right, Councillor Murray Bench.
So it's been intensely interesting, but you're advising us, I think, that inflation, we shouldn't expect that inflation is high in the survey that you did, and that we should be endeavouring to bring it down for our own management. I just think the horrible thing is that if inflation stays where it is, the poor are going to get a whole lot poorer in this country, aren't they?
Yeah, that's going to be painful. Yeah.
Deputy Mayor, did you have a question, or John? No. Did you have a question? No. All right. Thank you very much.
Great. Thank you, everyone.
And I think this was a good time while our heads are. Oh yes, we better do the business first. Right. Sorry. The recommendation is that we receive the report of the Chief Financial Officer and the presentation from Bancorp. Thank you.
Don
moved and Alan seconded. All those in favour? Aye. Against? Carried. Right. So while your heads are all exploding with figures, we'll go and have some coffee. Back at 5 past. note that there is an updated version of the report in your speller. So if you want to find the updated version, and I'm sure they will tell us what's changed. Thank you, Zara.
Thank you. So we've got the last quarter's updated financial reports. Really, it's just version control. And so a few commentaries on there have been updated. The numbers are still the same. So just to reassure everybody. Obviously tracking quite well in terms of revenue and expense, in terms of our year-end forecast as well. The main area really which we're behind on is capital delivery, as we've probably spoken about in the past as well. Obviously with the weather events and everything else happening, there's been a bit of a delay there. We are looking at reforecasting a little bit more as we head towards the year end and have an updated forecast in terms of looking at our carry forwards as well. And so that's also underway. The debt position, you did hear quite a bit today from our Bancorp support. Obviously, we've drawn down quite a bit already, and at this stage, we are just looking at how is our capital delivery going to end. Net debt is quite on track, and so we don't see any risks there. The reality is that we are just looking at those swaps and probably come back with an update for the next quarter. However, as you've heard, it's been quite volatile, so we haven't rushed into anything at this point in time. And also just at a high level, in terms of our treasury forecast, everything is tracking quite well. We did draw down another 10 million, which will be in the next quarter update because that has come through since. So that's in April and not much, so that'll come through in the next forecast. I'll hand over to Sarah just to go over some of the detailed variances by activity, and then we'll take some questions. Thank you.
So one thing I'd just like to point out, which some of you have probably noticed, is there is an extra budget column. So if you're looking at the capital expenditure and the revenue and expense, there's a full year budget, which is your annual plan budget. And then there's also a revised budget and a forecast. So I'd just like to note that revised budget column is from our first forecast. We just didn't hide it when we put it into PDF format. Yep. Cool. So if you're looking at the P&L, I'll just go through some of the bullet points that we've got there. Our rates income is tracking pretty much in line with budget, which is great. Subsidies and grants are below year to date. Most of this is due to the timing of the Waka Kotahi subsidy. Fincos are below year to date budget as well. They're lower than expected, mainly due to the reserves activities timing differences and budget phasing as well. Fees and charges are slightly higher than year-to-date budget. This reflects increased activity in the building and consent space mainly. Other revenue is higher than year-to-date budget. The reason for this being the unbudgeted insurance recoveries that we've received. Going to the expenses now. So our personnel costs are lower than year-to-date budget. This is mainly driven by the unfilled vacancies that we currently have. Depreciation is lower than year-to-date budget. A lot of this is to do with timing of how we do our depreciation accrual. And we won't run our actual depreciation until we do the year-end financials, so that will move slightly once we've incorporated all of the new capital expenditure. And finance costs are lower than budget, and that's because we haven't borrowed as much as we had planned, which is obviously a reflection of our capital program spend. And then other expenses that includes all of your additional levels of service projects, which are tracking below budget as well. If we then go and look at the capital expenditure analysis, so the team have been looking further into what projects are driving those variances. And hopefully this will provide a lot more insight to you. So if we start, I'll just go through the list again. So if you've got any questions, just let me know. Community capital expenditure is behind year-to-date budget, and that is mainly due to the timing of the pensioner housing project and spend. All of your water spaces, we had a chat to the asset managers and pretty much had the same feedback on a lot of it, being that it's just been really wet, and the weather has unfortunately moved the timing of a lot of their projects, and at the end of the day there's not much we can do about that. Transportation's under budget, and that links to some specific key projects, and that is timing as well. So we've got the Kati structure plans. They're projecting that their spend will be a lot higher than it is right now at the end of the year, just with timing of when that work's scheduled to happen. On Mokoroa structure plans, the year-to-date spend is behind. Once again, the project manager has indicated that it will ramp up before year end, which is great. And asset management for transportation is below, and again, it's a timing thing. And that is also impacted largely by the weather events. And solid waste, this is under year-to-date budget, and this is a direct reflection of not being able to find any suitable land at the moment. Any questions?
Yes, we have one from Member Henderson. Stuart, can you hear me?
Sorry, through the chair. Thank you, Murray. I was just wondering a couple of questions, if I might, in relation to revenue, where the big ones around subsidies and grants, and you mentioned Waka Katahi. Is there a likelihood that there will be a timing difference between now and end of June?
Yes, so we do the claim for the subsidy monthly. So yes. Our transport manager works alongside us to ensure that the timing is correct before June.
Great. And is that likely also to be the same for some of the development from financial contributions?
I guess short answer, yes. It all comes down to timing, and we'll be working with the managers leading up to year end. We're starting that process now to ensure that we have captured all that we can, and that anything that needs to be captured in this financial year will be.
Right, and so it's likely that we might see a bit of catch up there in terms of variances on those big revenue ones. In terms of expenses, is there likely to be, or is there a potential for any catch up on the personnel costs between now and end of June, or is that going to be a reasonably solid in the sense where we haven't been paying for, I guess, salaries that we'd budgeted for because we hadn't? Is that going to be sort of that trend going to remain, I guess, for the next quarter?
Yeah, so that's actually something that we're working with HR at the moment in terms of timing. We're actually doing quite a bit of analysis on what the vacancy rate is at the moment and where we're going to forecast towards year end.
Great. So I'm just sort of thinking in my head here around over the next 3 months, the likelihood of what kind of volatility we'll see to our surplus. So this is all good stuff. In terms of the Omokoroa land purchase, I was kind of a bit surprised because I thought that would actually be in the budget, given that we all know how long it takes to find and then negotiate and pay for suitable land. I was kind of surprised that that was even that was in the budget. So in terms of realistic timelines, is there any thoughts on that?
I guess I'm not the subject matter expert in terms of acquisition of land, but what I would say to that is obviously the asset managers had forecast that the process was going to be underway and it was something that they thought that they were going to deliver on. Obviously, when it comes to not being able to find land, that's an unknown. So originally it would have been in the budget with the intention that there was something available, but obviously not now.
No. Okay. And I was just wondering in relation to regulatory, does that includes legal expenses, doesn't it?
Are you talking, what page are you on, sorry?
Oh, sorry, I don't have it up in front of me. I took some notes. It was just where we look at regulatory costs.
The expenditure.
On expenditure.
Yep.
Does that category include legal expenses?
It will include legal expenditure that is for the regulatory activity, yes.
But that won't include legal expenses for other things that are does that go into corporate services?
So the legal expense, the legal expenses are delegated to the activity in which they're used.
Oh, okay. So, okay. Thank you. No, thanks very much.
Just through the chair, just to confirm what Sarah just said, yeah, we are activity based in all of our costs. So that's when we're looking at identifying the true costs of our activities, that all costs go against those activities, including legal.
Councillor Thwaites. Thank you, Chairman Murray. The list of the current accounts that we used to receive regularly in the past, that used to be a 2-page document, then got collapsed into one, and now it's disappeared. We haven't seen it this term. So where is that information? Used to have all the accounting costs. It used to only change at the end of the financial year. I thought it used to come to my committee, but it got stripped out, but hasn't been put in anywhere. So I've been waiting for it. And I said to Murray, you better have it next time. He hasn't delivered.
So you're correct. We only fund at year end. So your current account would only move at the end of the year. Yeah. But and I know that Rodney's asked for it as well, what we can do is we could provide what it is as it stands. Obviously what was audited in the annual report for 2022. If that's something that you want to see.
I think especially for the new councillors to see it.
Yeah.
Considering we used to get it every 6 weeks and now suddenly we don't get it at all. I mean, well, it used to be in the pack. So I'm just trying to find it in the archives now. So I know Rodney's asked for it, and that's why I asked, where is that information? And it still hasn't come. So the new councillors don't know what they don't know.
Yeah, that's fair enough.
You will certainly take that on board. And I also just want to point out that that information has been produced for the annual plan as well. So the details with opening balances and next year's expenditure is out, obviously, as part of our consultation and ready for final adoption as well. Thanks.
Councillor Joyce.
I'm a bit confused because I mean, one of the documents I have has the current account and internal loan balances as March last year, which is not the end of the financial year. So it sounds like we do it more often than at the end of the financial year.
No, they changed.
I've got a March 22. That's the last report. I presume there is a later one, but I was hoping for a current one. So I mean, those balances don't change at all during the financial year, internal loan balances or current account. Because I'm just wondering how we got a March report last year, and it's not the end of the financial year.
No, you're correct. They don't move. I'd have to obviously see what it was that you received, but it may be that it was run in March, but it would have been the figures that were adopted in the prior year's annual report.
Okay, carry on. Any other questions? All right, we'll call for a mover and seconder to receive the financial performance update as at 31st of March report. Thank you, Councillor Henry, Councillor Coxhead. All those in favour? Aye, against, carried.
Health and safety, I believe.
Indeed, 9.3, page 42 of the main, back to your main agenda. Page 42.
Good morning, everybody. So the health and safety report, the overall performance from our workers and our contractors over the previous quarter was pleasing. There was a lot of work from my personal perspective to understand how we as a council operate out in our communities and how we engage with our contractors on the same measure. There was a lot of, one of the key hazards that we exposed, and we discussed it in the last committee as well, was around the exposure of aggressive and violent behaviour from our customers towards our staff and indeed councillors as well. And so that has created a large piece of work to try and understand that, put some better systems and measures in place to try and protect our people. And there's a lot of work that's still ongoing with that at the minute. But overall, there's been a really good understanding of where we sit as a council, how we operate from a health, safety and wellbeing perspective. And that's enabled the development of a pretty broad strategy to try and improve safety behaviour within our council. If anyone else have any questions about any of the content?
Councillor Marybridge.
Are you saying you have to train the contractors?
I wish. No, just engaging, creating better relationships with our contractors so we have more transparency about how they operate, our expectations of our contractors, how we onboard them and how we manage them when they're performing those works. So creating better relationships on that front.
Councillor Crawford.
Yeah, so I was reading that summary, overall events reported, less frequency of incident types with the contractors. So why is that? Does that happen because of the better relationship?
Increase in contractor events? Yeah, so I've been pretty proactive in trying to establish better relationships with our contractors and encourage more regular reporting, more on the time reporting. We have had instances in the past, in my initial experience, where we're not getting things till 6 or 8 weeks after the event occurs. And so I'm trying to be more proactive with our contractors to get more ready information so that we can work with them, particularly if there was a significant event, we have the opportunity to engage in that investigation with them, as opposed to finding out about it significantly after the effect.
So how does that reduce the numbers? So they've obviously stepped up. Is that's because you're getting more accurate information?
So the contractor events have increased over the quarter compared to the quarter prior, but the severity of them is low, which would suggest that they were not reporting the lower severity ones because they were low severity, whereas in fact our position is we want to find out all of the events that occur so we can try and identify those trends and work with our contractors.
I'm looking at the description of the physical confrontation event on page 47. And well, firstly, just how awful that situation must have been. But I'm also looking for assurance that what happened after that, because I wouldn't want the case to be that that kind of behaviour gets results and that they didn't end up, paying whatever they needed to pay or the whatever council needed to do. So is there assurance that that sort of situation is followed up? And I totally agree that de-escalation and it might be the absolute right thing to do at that point, but at some point also the consequences of behaving like that need to be addressed.
Are you talking the first or the second event? Because I think the second events are more significant.
It said it says one physical confrontation event, 3 council staff.
Yeah. So that was more an educational visit, that one, where it was I think it was a registration issue. So they were literally handing over information on that one. But part of that, what that uncovered from an investigation perspective, is our systems didn't alert our people, because there'd been a previous event not related to animal services at that address, but our systems didn't alert our people that they were going to that environment, and so to be more protected as they were going there. So to enable that, we can improve how our system operates for our staff so that we're more prepared when we get there. But in terms of following through on the expectations registration, we don't just let it slide, so that the enforcement continues. We're just going to have to be a little more strategic about how we do that so that we protect our people and try to go through those processes.
Great job, thank you.
That's good.
Councillor Henry.
Yeah, so going out to our communities, and I think we probably realised this before, that it was a bit of a reputational risk with the service delivery for roading and parks and reserves. And from that, we've looked at, we're going to look at more local procurement. So you mentioned about dealing with a lot of contractors. So how do you see that as managing this sort of risk type with more contractors? I mean,
Yeah.
how will you manage that?
So
And
part
keep
of
that consistency. with all
correct,
of
yeah, consistency is key across. So part of the strategy, contractor management is one of the key strategy items. Again, about how we onboard our contractors, depending on the level of risk that the works that they're conducting. So we have more of a risk-based approach to onboarding. And then in terms of understanding and managing those works, or having an overview to ensure that our contractors are doing the right thing by our communities and by how we want to operate. This is when the works inspections, post-work audits, during the works inspections and the like will be key. But in terms of onboarding the more local community base, this is where the risk-based onboarding process becomes really important, so that we have a good understanding that the systems and the methods that they're likely to use in the communities to perform the works are at an acceptable level of standard for us.
It's initially, when taking those new localized ones on, that the impact for your team will be high initially, and then as you feel satisfied, it will slow down.
Yeah, and so that's something we have to improve on more broadly outside of going to that sort of model. We have to improve on that in terms of how we engage and manage our contractors for the works they perform.
Yeah, I think just to add on to that too, our contract managers do a really good job in this space. So it'll be a continuation of building that capability as our procurement changes, and really focusing on some of those core systems and processes, having them in place and being really, really strong, and having that focus on supporting our contract managers to do a really good job in that space. So for us, that key focus of that pillar within our strategy around that contract management is making sure that we've got all those tools and resources available for them to do a good job, and that they're focused on those key outcomes in that area.
Councillor Joyce. So going back to the aggressive customers and the high potential safety events, are the two related? Just a matter of interest? I mean, are they the same?
Separate events.
Okay. You've talked in here about reviews and updates of security setups, and you've mentioned Kalikati Library as having a particular issue. What's the issue there? And also Makaroa Library as well.
So Kalikati Library is more about the layout and design of the library. So, for example, the computers are upstairs, and so all the Wi-Fi and usage is upstairs, except we have no staff presence upstairs. All of our staff presence is downstairs. So the layout in terms of bringing that service downstairs to be more visible to our staff. Also, the layout of our counter enables people to come in and blindside people when they can't see them coming in. So it's just a general layout of the site to enable our people to be more protected.
So just building on that, part of our key strategy in that area is we've been working really closely with our library services teams, and they're really proactive. They understand the business that they're doing, they understand the environments that they're working in, and they've been really, really good at contributing to solutions in those spaces. So we've got a piece of work which Clint has been leading in that space again. We were running a number of sessions with our teams, and the outputs of those is really good. Our people are empowered to make good decisions in those spaces for themselves.
Councillor Murray.
I've got two questions, sir. The one is about the libraries. Are we finding that teenagers are going in? Who is the problem? Who's the problem in, I know in TCC, that library have a security guard. I think we have one now at Te Puke.
Yep.
Is it because of antisocial behaviour from young people?
The trend for Katikati is that there tends to be more teenagers that are just how the Katikati, and we run a collective insight session where we go to the teams and say, what do you think contribute to these events and what are the solutions we can put in place? So that's what that session that Darren was talking about. Katikati certainly is about the teenagers, and there's just nothing for them to do. So they congregate in this area where there's free Wi-Fi and comfy environments, and then they get the teenagers, so they become rowdy. We let them know not to continue, and then that creates and escalates an issue.
Have we got the power to ban any of our staff got the power to ban antisocial behaviour kids from our libraries, as they do in Tauranga?
Correct. So we do issue trespass notices where required. Again, it's a conflict type situation to do that though. So what the aim of those strategy sessions was to try and not get to that point. What can we do, whether it be our systems, our processes, how it's set up. Katikati is a good example, created a community environment hub for these kids to go to and do cool stuff rather than come to that environment. But some of these are large scale projects, so they're not quick fixes, but it's the teams giving us the solutions, and that's important.
Right. The reason I know, sir, is because my friend Jemima was a security guard in the library in town, and a lot of young people there have problems. Do we have a forward program to actually help? It's not really your area, but can you recommend?
Part of it is engagement with the communities. Oh, sorry.
Thank you, Mr. Chair. Perhaps I could add to the kōrero, Margaret. I guess the first thing I want to say is that our young people, whether at Te Puke or Katikati, are not antisocial. They are teenagers, and in some instances they're young, they're adolescents who are just doing what adolescents ordinarily do after school. I think that there is a bigger issue, and Clint has rightly touched on the collective insight work he's doing from a health and safety perspective with staff at the library, particularly to help them feel safe in their workplace. But the next step for us is to collaborate with other key community groups in Katikati, particularly the Katikati Community Centre, around how we provide opportunities for our young people, particularly in that adolescent to teenage kind of bracket, who are at a loss for things to do after school or in the school holidays. So I do want to emphasise that they're not antisocial, they're not a problem. They are our kids in our community. They come to our library and we want them to be there, but we want them to be there acting appropriately. And the interventions that are being progressed with Clint's support in terms of the layout of the library will help us to keep eyes on them. And make sure that they're not being disruptive to other library users. But we want our kids to be in our library. We want our kids to be in the hub, but to be there in a way that's productive and not causing a nuisance to others, but helping keep them entertained.
Thank you, Mr. Chairman. My second question is to do with dogs, and poor dogs, what rotten owners they've got. And the police, are they coming quite quickly now?
Where there's a known risk, where we're going to a property where we expect to have confrontation, there's a targeted approach to how we do that. The ones that were mentioned in the report here, the second time they came around, but we're actively trying to establish those closer links to the police, the local police, so we can de-escalate those situations before we get there. But certainly if we're going to a place that we expect a confrontation, we will make appropriate arrangements to make sure that the police are involved where it's going to escalate to that point.
It seems as though that the ongoing problems with one particular owner.
Mm. Correct. Yeah, it's a really difficult one. I think I know who you're talking about. It's difficult. We do collaborate with the police where necessary, where we don't want our people to be put unnecessarily in aggravation and harm's way. And so where we can engage the police, we do.
Member Henderson.
Through the chair, I was just wondering, has there been a link between the recent contractor events and the emergency and civil defence responses to our sort of weather events in the last quarter?
Surprisingly, no. I thought the same would occur, but I didn't notice a spike in contractor events with all the work they were doing with the roads and the flooding and all these sorts of things. So I didn't notice it, but this is where we need to ensure we have those really close relationships for reporting, because I would have expected the same, but in actual fact, no, it didn't eventuate like that.
Thanks. All right. Any other questions on health and safety?
Just on the same sort of thing, did we press charges in the incident where the vehicle was vandalised?
Not that I'm aware of. I haven't gone into the full details of what we did from that. I was more about the looking after our people when they came back from it, particularly the person who's not. We had a office-based member who was with the animal services people, so that person wholly didn't expect to be involved in that situation. But I could follow up. I'm not too sure whether we did or not.
I'm just wondering also, do we have a good direct line to local policemen?
So certainly in Te Puke, they have a really good relationship. Katikati is a little more difficult. And here at Barks Corner, we're looking to establish that. So I'm in the process of creating that link to the Greaton constable down there. At this stage, it's a work in progress though.
Yeah, and I would have thought Te Puke, I mean, not out the locals from over there, well aware of how open and obliging the local policemen are over there. But just in terms of having a disqualified dog owner residing with a qualified dog owner, or a dog being allowed to reside at a property with a disqualified dog owner, is that something you see as a good situation or reasonable situation?
I mean, we're bound by the regulations, and so the regulations allow that to occur. If I have my personal opinion, it doesn't seem right, but we're bound by the regulations and the law that we need to enforce.
Councillor Crawford.
My question is just around, this is both in the library and dog, where they are facing, these incidences with public. So with internally, with training of your staff, have you guys been increasing that in the way that they can, the tactics of how to de-escalate than reacting, and maybe feeling the situation?
Correct. Yeah, all of our public-facing staff have de-escalation training that they all run through, and that's part of their role. And so that does work well. We find that the situations that do occur, our team act in a really good manner to actually de-escalate it and not allow it to progress. The ones in this report were exceptions to the rule, but the work is trying to what are we doing, how are we working, or what are the systems and frameworks that we have to work within that actually create these events or contribute to these events, and how can we work better as a team and as a council to actually try and nip them in the bud before it even occurs. And so de-escalation stuff is absolutely a part of it and critical, because our team do need to know how to react. But we're looking to be before the event even occurs. What can we do to try and stop it?
Councillor Marabenge, do you have another question?
No.
We do have to be mindful of the fact that in our current society there is social media, and the latest trend apparently seems to be live streaming yourself being a pest to other people, including walking into a library, selecting a random book and going up to the counter and tearing it up in front of the counter while it's being live streamed. So, our staff out there have got to come to grips with all sorts of random nonsense that they're not necessarily expecting to happen.
Correct. Yeah, and we can only control so much, but we can't control what our customers, members of the public, are doing for a kick, for a laugh. We can only control how we can react, firstly, but then what we can put in place. If it is a service interaction piece, then we have a lot more control over how that situation occurs. But the like of the social media getting a kick for a laugh, we can only just try and deal with that as best we can.
All right. So I move in a second to receive the health and safety report. That's Marabenge. Who's hiding behind there? Councillor Sol. All those in favour? It's carried. Over to Ernest. Page 52. Thank you, Ernest.
Good morning. So we've got quite a comprehensive risk and assurance report today. So we'll probably take it a little bit of a page turn and go from there.
Good morning, everyone. Morning, Chair, Mr. Chair, and the rest of the councillors. So we see that we've got a few things here in the risk and assurance report. I'll start off with the KPMG post SLT workshop. After the post SLT workshop, we had the councillors and SLT workshop. You all were involved in that workshop. Interesting discussion, a lot came out of it. So I'll get into that shortly. And then we have the draft risk management framework, which we handed over to KPMG for a review. A lot of interactions between us and KPMG and finalizing that. So that's the final copy that you see, that the draft risk management framework. And then we have the updated strategic risk register, which has 2 new strategic risks on it and a revised title of a risk there. And then we have the risk management work program, which I'll get to it shortly. And then we have the internal audit plan, which we are reporting after the last audit risk committee. We dropped down the audits to specific or high risk areas that we would like to have provide you assurance on. And then we finally have the cybersecurity report, and I have Richard Gilligan here to speak into it, should you have any questions. So getting to the first bit, which is the risk management. I take it that everyone has read this, so I'll just briefly go on into this. So we always head back to the risk management maturity, the roadmap. So we are on track with the roadmap. So we've completed the council and SLT risk workshop, and we are embarking into the operational risk, as I mentioned the last time. And we've completed the draft risk management framework for your approval to council.
Just a question from Councillor Joyce.
Just going deep into the risk management framework, in Appendix A, you have a risk rating matrix.
Yeah.
Catastrophic risk and likelihood rare, which could be anything up to 20%, as I understand it from the documents. Forgive me if I'm reading this wrong. Page 97 of the framework. Actually, page 26 of the framework, page 97 of the agenda. I have concerns that anything considered potentially catastrophic impact is only rated as a medium risk. It's actually the risk that humans underprice consistently. In corporate life, I've seen it. In ordinary life, I've seen it. A good example is the people who turn in front of trucks coming out of the Mokoroa corner, right? They'll probably get away with it. You know, the risk is pretty low because they're not going to do it right in front of a truck. But if they miscalculate, the effect is catastrophic. And so the only thing, I mean, I couldn't read the whole report. It's very detailed and there's some better experts around than me. But, you know, the idea that something with catastrophic impact could be medium risk is the classic human failing, to be honest. You know, engineers do it all the time. Oh, why did you do that in the middle of the week? Oh, the risk was really low. Yeah, but the effect when it went wrong, that risk went against you, was really high. So I would suggest the matrix needs to be just a little bit more conservative when you're dealing with catastrophic impact. I mean, the rationale is right. You need to look at risk, you need to look at impact. But when you're dealing with catastrophic impact, then, you know, by putting the word medium there, it means it's further down the organisation that decisions are made, as I understand it. So I would be wary of anything with a catastrophic impact having a medium or low rating, because of what I've seen in corporate life in strange parts of the world.
Through to you, Mr. Chair. Sorry, Rodney, is this page 96, Appendix C?
Of the agenda, page 26. Page 26 of the report, page 97 of the agenda.
Thank you.
Appendix A.
Appendix A, yeah. Sorry to go down the weeds, but it's just something that I've seen happen an awful lot when impact is underpriced versus risk.
Yes, we'll take that on board and get it reviewed and come back to you.
Councillor Cox.
I think, Rodney, this is a pretty standard matrix for risk management, but I think catastrophic rare, it's medium in relation to the other likelihoods. So as you go up the scale, so a catastrophic event that is almost certain is extremely high or very high. So it's in relation to the others. This is a standard matrix.
I'm gonna keep talking, but that's the issue. It is a standard matrix and it's wrong because if something is a catastrophic impact, I mean, because you don't forget the difference between medium high and very high goes even to the level of the organization that addresses that risk. So I understand it's standard and I've seen it go wrong.
No, I understand that, but let's say a 1 in a 500-year event, which is rare, but it's catastrophic. That's a medium risk. You don't manage that at the high level. That's what it's saying is how you manage it.
But it's not just 1 in 500-year events, it's up to a 20% risk. But the risk in this risk matrix, rare is considered anything up to about 20%. So
we'll review that and get back. We did have another draft version that we were working through, so we'll get back to KPMG just for some input and come back.
Councillor Murray.
On page 59, could you go back to that one?
59.
And I think you need to check the wording because we had a great debate about prioritising and this one just doesn't add up. It needs to be improved.
Which wording are you?
I don't want to make a fuss, but it's
If I may, Mr. Chairman, it's conforming the wording that we agreed to the annual plan, long-term plan committee. I'll leave it at that.
And also, I thought that the medium to high risk makes a mockery of the issue that Councillor Joyce was raising on catastrophic, goes to medium, whereas this one is medium to high. And I just question that as well. Every member of the community would say that their needs hadn't been met, it would be a high risk, medium to high.
Noted. Yeah, we'll look into that. Thank you. Yeah.
Right, back to you.
Yeah. And so we're moving on to the internal, progress of the risk management work program. You can see the green and the red there highlighted. The delays a bit. They were just waiting for the risk management framework to be finalized and then introduce that into the operational risk workshops across the organization. So that's where with the internal audit, I'm moving on to the internal audit work program. Internal audit plan, sorry. You can see we've reduced it to 8 internal audits. I've highlighted them for the year 23-24, which is financial contributions, which that is underway at the moment. Capital spend project management, we're just taking key high risk projects and doing an assessment on that, a review on that. Fraud gap analysis, that is also underway at the moment. We have the resource consent and building, consent enforcement, resource consent compliance and audit there. We have the ESG, environmental, social and governance sustainability framework, a review on that. GST, as you heard this morning presentation, we have GST and FPT tax compliance evaluation, asset purchase and disposal, investor asset process review. So we've interacted this internal audit program with the external and also the GMs, the business general managers. This is the final copy here for your approval. And the next page is the internal audit, the strategy that we use. We will look into two areas, value enhancement and value protection. Value enhancement, do we have the right controls built into the systems and the change properly managed and controlled? And the value protection bit is
just through the chair. I've seen some people are just trying to find what page you're on to. You know, so just referring them to page 66.
Sorry.
Yeah. Why isn't it on the screen?
Yes, it is in the agenda.
Yeah,
yes.
it's in the agenda.
Sorry, I was rushing.
67, 66.
So page 67, that's correct, yeah. So everyone said, yep. So yeah, that's the internal audit strategy that we use when we're carrying out the audits. So value enhancement and value protection. Value enhancement being are the right controls built into the system and the change properly managed and controlled. And the value protection bit is, have we got the right controls in place and are they operating effectively? So every audit that we carry out, we'll look into those two. And then moving on into onto page 68. What we've done here is that we've actually linked all these audits to Western Bay of Plenty's District Council strategy. Put here is the key risks that we have actually identified and finalized, and to link that to the key risks as well. So in the next report, we'll link that to the key risks as well. And we have finally the cybersecurity report. Richard, do you want to speak into it?
I'll just take it as read. Richard is our specialist and looks after the area of cybersecurity. So if anyone does have any questions, they can ask them directly of Richard today. Thanks.
The cybersecurity report is a quarterly report generated. I'm the technical operations team leader in the IT department. So the purpose of this report by the IT business unit is to provide the assurance that matters surrounding cybersecurity risk is managed with adequate controls in place. The Western Bay of Plenty District Council underwent a cybersecurity assessment in December 2022. The assessment was conducted by CyberSmart. The audit assessed Western Bay's existing cybersecurity measures against the expected criteria and standards relevant for our business type. All outstanding issues raised by CyberSmart have been reviewed and are on our security risk register for action. The tool for the register creation and assessment is ALGIM SAM for Compliance, which is the Association of Local Government Information Management. And it's the self-assessment and management platform. So SAM for Compliance has been live in our council for some time, and it is generally seen as the council standard tool. It's also a reporting tool, and with my team updating changes regularly through the year. A yearly information security assessment should also be carried out by an external third party to ensure the accuracy of the compliance data. Again, the assessment was conducted by a consultant who's based in the Bay of Plenty and has significant network and security footprint with major companies in New Zealand. CyberSmart is actually a leader in this field. The SAM for Compliance cybersecurity benchmark results will show Western Bay versus other councils, and we sit fairly well. It's available on request. It's important to note that security standards are assessed against varying levels of compliance, and that at the very highest level, the standards are not applicable to a council, or our industry in particular. That is, Western Bay's cybersecurity does not need to be at the same level of, say, a bank or an intelligence service. An appropriate level of investment is currently being decided by the IT department, by our group. So the impact, the next point, impact of phishing emails, attacks, and the staff turnover rate at the moment has meant that relying on a 6-monthly or yearly cyber review session, which some councillors may have attended, is really unwise going forward. So attendance is inconsistent due to work commitments. So council is deploying the ALGIM friendly phishing tool, and that will perform a baseline of council and perhaps recommend any staff that need additional training. And that'll be an ongoing assessment. It's not something we will announce because we wouldn't get a baseline if we told people that we were sending out fake phishing emails. That might give the game away. So this will be an important part of putting council staff into training going forward, is to see those that perhaps push the button. Normal level of spam and threat activity has been received in the last 3 months. We're not seeing ourselves being of interest at this stage. Council continues to look into cybersecurity insurance. The insurance premiums will be dependent upon the strength of our systems, processes and controls. So should any perceived gaps exist, cybersecurity insurance may be considered. That's it. That's it. Currently the status. I do, yeah. The completion of the updated disaster recovery plan and the real world testing of the disaster recovery plan is due within the quarter. So our new disaster recovery systems are installed, and critical systems are being synchronized. Roughly the data between 5 minutes and the systems up to an hour. The backup technology to take copies, that was also upgraded. So we have a new service, which is our offsite isolated recovery salt. We're just calling that the Vault at this stage. This is it's been slightly delayed due to the getting network provisioned to that location, but it's now in progress. So the Vault is a hidden copy of council data and systems that even the IT department can't access. So to gain access to that copy of council would require authorization from senior leadership around allowing access into that, and that's controlled by a vendor. So that's based on the District Health Board, Waikato District Health Board, where they had a deep intrusion for some time. So if IT, as a privileged account, can't get into our isolated copy, then neither can the bad guys. That's how the isolated recovery system works. So the design has been brought forward to create a cold recovery site for council. So this is a site that's very low cost, and in the event that we are significantly compromised, we can take the copy of council from our vault and we can place it into our recovery site and bring ourselves back into operation. And that really just sits there and is just ready for, and hopefully we never have to use it, but we take the stance that it's more a case of when, not if. And finally, our council information security policy, which is our acceptable use standards, it's finalised by the Chief Information Officer and Adele, and going forward, IT policy was going to be referred to as our council information security standards to align with industry standards. And these standards will be published to staff, and they will record their acceptance of that. That's already taking place with new staff now. That's me.
How often is the Vault site updated?
It's constantly synchronizing. And what we do with the Vault is we keep a much longer copy of our data than we would keep in our on-site backups. So this means if we're compromised, we can go back significant timeframes, almost as it's building, almost a year, to qualify data that if we ever are compromised. That's a real-time synchronization. It's generally done between 5 minutes and an hour.
So if the bad guys got in, it would be real-time reflected back there, but you've got older copies.
Yeah, it's older copies. In fact, we don't send data to it. It actually opens up and requests it from us. So we can't even, so it's, yeah, we don't even know it's there. It's not even identifiable as being something at council. So. Correct, yes.
Councillor Sol.
Yes, just really a query back there in environmental, social governance, sustainability framework, la-di-da-di-da, and then down below there. I noticed we have things over into the 25-26 year. So it's more, when did we last review some of these things? When were the policies last, or reviewed? And I'm perhaps just looking at relatively little things, but they're funny little areas where things go wrong. Cash control review, the treasury and cash flow management, and IT software license management. When were they, they're due to be looked at in 25-26. When were they last looked at? When did we establish our situation or whatever?
We can provide that information to council, but ultimately it's a rolling program just to make sure that we are obviously testing these things on a regular basis. So we're looking at the timing of the last review and then set the program going forward. So it's based on timing. Okay. But we can get a full list if required.
As long as you're comfy.
Henderson.
Oh, thank you. Just a couple of questions on both the internal audit plan and strategy, as well as the cybersecurity. Just in terms of cybersecurity, do I take it that when insurance when insurance companies are looking at cyber insurance, would they look to that sort of ranking of where this council sits against its peers as indicative of how they would see us in terms of our cyber security maturity?
Ask Adele to address it.
Through the chair, so I can confirm that we do have some insurance to do with cyber, because of the risk and the magnitude and potential costs. Looking at an extensive cover will come at a significant cost, but the work that Richard and the team and working with the external consultants is where we get our best value for our spend to ensure that we're not vulnerable in the cybersecurity space, because it is obviously ever changing. But our current policy is one through the BOPLAS, or the Bay of Plenty Local Authority Shared Services, and we've got a limited liability cover for loss and damages of 2.5 million, and sublimits of liability at 1.5 million, and damages for that at 500,000. So there's a variety of sort of areas where we've got some limited coverage, but there can be widespread impacts, particularly if you get, the locker virus coming in and it locks everything down, and what does it take to pull things back, and it can be quite different in terms of what that risk might be.
Yeah, thank you. And I was just wondering, in terms of the internal audit plan and strategy, do you also look, when you're reviewing it, I guess annually, do you look at the external audit plan as well, in terms of what they're saying their focus is going to be? I mention that because I think in the external auditors plan for this coming year, they've made a point that they're going to be having a focus on looking at Three Water implication and application, and which is going to be pretty fuzzy and interesting, to say the least. But is that going to be also considered from an internal audit perspective in relation to what that might mean to your strategy and priorities?
Yes, Mr. Chair, through you. Yes, we have looked into that. I mean, when it comes to what the external auditors are doing, we don't want to double up the work. So we rely on the assurance that they are providing to us.
No, yeah, except that they need to consider assumptions, and they can only do their work based off the assumptions that are provided by council management. And I guess where you come in is looking to understand just how those assumptions are being made, and
that's correct,
verifying those. So that's the link. I mean, I know it might sound, I'm sorry, folks, that I keep talking about Three Waters, and but I personally see it as probably the biggest risk adjuster that councils will be facing in their current term, i.e. the 3-year term, and it's pretty manifest in relation to all other risks that the council's looking to manage and mitigate. So I'm sorry, it might sound like a bit of a drum that and a regular theme of mine, but I do think it's probably the biggest, single most area of risk and risk adjusting that the council's got to be front footing.
Thanks, Stuart. We'll get Adele to respond to that.
And through the chair, so obviously we're very much focused on what's coming ahead in terms of Three Waters. A lot of work has been undertaken in the original data supply to the DIA as part of the information requests that they've been seeking as part of the process. We're going to be doing a lot of work with council as we're working through the long-term plan and awaiting sort of any updates in legislation, which will talk to when and how we're required to include the Three Waters and for what periods, etc. As you've noted, Stuart, it is on the audit plan. It will be a focus of the external auditors, and we'll be ensuring that we meet our requirements internally. Whether we need to take it as far as doing an internal audit, we're going to be thorough in terms of the work that will be done, and that will be peer reviewed by the external auditors in this case. So I've got confidence that they're all being trained up at the moment in terms of what's going to be required for that audit.
Oh, thanks, Adele.
Councillor Thwaites.
I hear what Stuart says there, and I bit my tongue when he raised it last time, but he seems to keep going back to it. I see it completely different to Stuart. I see Three Waters as no trouble at all with this organisation. A huge amount of trouble to the community out there who are going to pick this up. I guess I'm wearing more of a community hat, and the uncertainty that this Labor policy has brought into and the cost that they're going to rack up, and they're doing the damage they're doing now is the real danger I see. So I don't see any danger to this. I see huge danger to community, people in the communities, their back pockets when the costs come through. So I just had to comment this time, because Three Waters, if you think it's good, well, you see it different to me.
Can't hear you, Stuart.
Sorry, that's probably a good thing. No, I don't think I'm nowhere along the line have I suggested that I think it's good. What I'm saying is that it will, and yes, its impacts are going to be felt by everybody, but it will be it's going to be massive here for this organisation. The change to staff, the change to direction of balance sheet, change to your decision making, change to the whole framework of council going forward. And what I'm saying is that change is risk, and it's not small. So I'm completely agnostic in relation to the policy.
Cover this, sure. Councillor Daly.
Yeah, Richard, I was just do we have a induction program for new staff when they arrive that includes the IT security thing?
No, not directly, not for new staff. We've been relying on the 6-monthly, 1 yearly sort of cybersecurity awareness training. A lot of new staff that come in have been trained in general. We're finding that trend is more evident. It's quite normal in the business place, but the anti phishing, or the friendly phishing as it's called, really will just bring out clear and front which staff would probably need to have that training, and that will be arranged through that friendly phishing tool. People actually get invited to attend an online seminar. So we're going to kind of automate the process. But as to induction, no, it's not generally done yet.
Because I mean, you've got two threats, I suppose. You've got the threat of a new employee coming in and wanting to game the system, or maybe come in with a nefarious motive, and then employees totally innocent who might put the organisation at risk through, like you say, responding to phishing activities. So is there a distinction between trying to maybe put a bit of fear into a new employee if they think they're going to come in and maybe take advantage of the system?
So new employees sign the acceptable, basically our IT standards, which sort of outline what you can and can't do. As to what they attempt to do after that, that's up to our security systems to hopefully stop it. But in general, yeah, if something's done inadvertently, it's so far so good. But if somebody's deliberately seeking to attack council, that's another matter. So it's probably a higher level of monitoring required, I guess. But yeah, so far so good, Councillor.
Through the chair, just to further to Richard's comment, so as part of that sort of signing of the initial paperwork, and the councillors were also given that information, it does sort of talk to some of the risks of council. in terms of cybersecurity and phishing, etc. And as Richard pointed out, I think the biggest thing is most people are aware of it these days. And so by actually reading that contract and signing it, so that they're already aware, and then doing this ongoing program of work and testing of our staff as well. Yeah, and we've got our internal intranet where we pop up things as well, just as new information. And if there's any risks of council of these things that we are seeing, then the IT team publish that and let staff know.
Councillor Murray.
I just like follow on from Stuart. I think that if Three Waters goes through, if reform of local government goes through, if the RMA reform goes through, this council's wiped out. And it's a massive challenge for us when you think of the amount of basic work that we have done to run a successful council, and we have. So, but my question is to our technology. Marilyn, I think it is, has kept us up to date with everything to date, and we are sophisticated as we need to be before we look at even ensuring the systems that we've got for cyber attacks. So I don't want to answer to the first question because that's my opinion. The second one is, are our systems so good that they need to be insured? That's one thing, but are they as good as they can be?
Through the chair, that is a big question, Margaret. So just in terms of, in anything that we do, particularly in the IT space, you can spend a whole lot of money and to get to the highest level, and that cost to get to that level can be significant compared to we're thinking about the ratepayers' cost, so there's a lot we can do back end, and we are constantly weighing up, where we want to sit in terms of how much risk we're prepared to take, because to get to zero risk will cost us a significant amount of dollars. But, we're constantly ensuring that we are aware of the risks that we're dealing with, that we're working to those, that we're getting our checks done, our health checks across what we do. And in terms of our systems generally, it's an ongoing review to ensure that we are meeting the needs, particularly of our customers and our ratepayers and our staff. And so we are looking currently at whether or not we need to replace our ERP system, for example. The world is changing rapidly in the IT space, as you know. The ChatGPT is kind of a new space in terms of things that we need to be aware of, how staff are using information, how the community is using information, what's the truth, what's the not truth. And so, we are looking at whether we need to start to have policies around this other information source or the generation of reports that might not be self-generated, etc. So, yeah, we're constantly evolving and working to manage the risks as best we can. Thanks.
You can never ever achieve zero risk. There are zero-day exploits almost every day that people didn't know about yesterday. So you can't build for them or insure against them because they didn't exist yesterday, but they exist today. And so that's why the systems that Richard and the cybersecurity external people have put together seek to mitigate that. And I spent time with both of those fine gentlemen discussing it in great detail, and I'm very impressed with the systems that we do have here at council and the way it's managed to minimise those risks as best they can, but you'll never get to zero.
And through you, Mr. Chair, that's correct. Now we're always proactive rather than reactive. We're moving into that space. So when it comes to risk, thank you. Yeah.
Right. Did you have any other points you wanted to cover on the report?
No.
Okay, so we've got the track changes copy. I note that it's still got this committee's name wrong everywhere.
Yes. Thanks.
But apart from that, any other questions? All right, then we'll got 3 recommendations there: that the risk and assurance report be received, that the approve the risk framework that has been presented to us, and that we approve the updated strategic risk register as per the comments here. So that's Councillor Murray Bench and Mayor James. All those in favour? Thanks. Carried. Right. Boplas, who's telling us about Boplas?
Through the chair, I'll just take the report as read. And any other questions we can direct back to Babe Pentilais. This is just the standard reporting requirements back through to council.
So any burning questions on the BOPLAS report? No, well, then we have a
Have to move, Mr.
recommendation
Chairman.
to receive the BOPLAS report. Thank you, councillor Joyce. Mayor James, all those in favour? Aye, against, carried. And the last one is the CoLab report. Again, it's taken as read.
Through the chair, that's read. Thank you.
Any questions from anybody on the CoLab report? Right, I shall move that we receive that report, seconded by Councillor Deputy Mayor Scrumger. All those in favour? Aye, against, carried. It's time.
Public statement.
Yes. All right.
Just a mover and a second.
Mover and a second to move into confidential public exclusion. Thank you, Councillor Henry and Councillor Coxhead. All those in favour? Right, it's carried.
1 minute, or we turn.
Yes, we'll turn off the broadcast. Change papers.